All righty. Good morning, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is April 11th, 2023. And so I'm gonna lead off here with doing a market overview here. We're going to look at the major markets. We'll look at the SPY and the Nasdaq, and we're going to start doing that each week on Tuesdays, and kind of give a rundown on the prior week and kind of where we are in that. And we'll run through that, and then we'll look at a couple of kind of very popular symbols that people kind of look at. So we'll look at today. We'll look at Apple and Tesla, and really almost every week we'll kind of then sort of just change it up and what symbols that are in the news, and we'll look at a couple of those, and then of course in the main session of what we do in the second part of this. Obviously people are free to call out symbols, and we can just kind of be free form on that. But we'll kind of start off by having kind of a sort of a set formula here. All right. So here's the disclaimer. We all know about it, so I'll just leave it up here for 10 seconds or so, and then we will get into the charts. All right. So here we go. So here we have a chart of the SPY. Okay. Of course, the SPY for those of you who are new here, and we always have subscribers that are coming on board, which is awesome. The SPY is the ETF of the S&P 500. So of course one cannot actually trade the index, but essentially this is trading the index. What happens is companies essentially buy all the underlying stocks that are in an index, and they buy them proportionally with respect to their market cap, and they essentially construct that index, buying zillions of shares of stock. And so essentially when you're buying the SPY, you are literally buying shares in more or less the S&P 500 index. Okay, so this is where we are today. This is a daily chart of the SPY. And so you can see right now we're sitting at around 409.6. We're pretty much we're pretty much at break even on the day here. It's kind of a flat day, and partially it might be because I think to some degree there's been a lot of market action for the last week or so. Sometimes it's just sort of a breather, and there's some sort of consolidation. And then I'm thinking in particular tomorrow and Thursday there are some inflation numbers that are coming out. Tomorrow also the Fed minutes are coming out from the FOMC meeting from 2 weeks ago. And so while they issued their monetary policy announcement 2 weeks ago, the minutes kind of provide extra color and extra background. And every once in a while there might be something in that where it didn't occur right at the time of the meeting, or even when Jay Powell kind of has his press conference afterwards. But then 2 weeks later, when they kind of dive into the documentation of it, sometimes there is something that comes out that's either a surprise or it lends extra color, and as a consequence, that can be market moving. Usually isn't, but every once in a while it can be. So for all the above reasons, that might be just sort of the reason why we're kind of sitting here for the last few days at kind of this sort of consolidation area here. But anyway, so what we're looking at here are prices basically reacted off of a supply zone above here, and you can see it's kind of come down, and now it's pretty much this kind of flattening out here. For those of you who are new here and kind of start now with us, a supply zone is an area of expected downward price pressure, and that's created by essentially an exhaustion of buyers that occurred at that level. So right here, buyers and sellers were more or less in agreement, shuffling shares back and forth. But then at that point, then the buyers just disappeared, and essentially what happened is sellers had to run down the price chart in order to find willing buyers. And so essentially that's what you're looking at right here. Okay, there was a consolidation, and then price comes down, and essentially the sellers are running down the price chart looking for willing buyers. They're looking for demand for the shares. Okay, so that's what's going on there. So then once that level got formed, price came back here a few days ago, hit off of there. There was a little shot down, and now it's just kind of sitting here below. So that's where we are now. If we break down the chart and look a little further, we see kind of the next, there's an area of supply. The next one is above here, okay? And then, of course, there's an area of demand below. So an area of demand, of course, is the exact opposite here, but this is characterized, of course, by an exhaustion of sellers. And again, the buyers run up the price chart until they encounter willing sellers. And so right here, where price went sideways for, for basically a day, buyers and sellers were essentially in agreement. But then once we see this rocket out of here, that essentially says that there were no more buyers here, no more sellers. And so the buyers ran up the price chart until they found willing sellers that were willing to part with shares at that point. So at that point, right down here, all you had left once price departed is demand. You had supply and demand here. But once price rockets out of here, all you have left is demand. And because this was here for a short amount of time, the expectation is when price comes back, we could very, very likely see another bounce. So in terms of where we are now, what I do is I just created these little these lines here and put a percent change label on it. And so right now, this is where we are now. And so you can see we're more or less about a little over 3% down. That's where this demand zone is approximately 3% below where current price is now, going from 409 and change down to 396 and change. Okay, so this is a little over 3%. Okay, and then if we look above, okay, the next clean area of supply, because this one's already been kind of beaten up here, the next clean area of supply is a little over 4% above. Okay, so we're sort of, so again, there's about 3% down, 4% up. And so if you ask me what's going to happen, let's go over the next few weeks, or at least the short number of weeks and days, I would say we're probably going to be kind of range bound in between these two regions. All right. So that's what I'm kind of seeing here on the SPY. Okay. And also, if we just throw in a couple of other things that people tend to look at. So what here, I've just now thrown in the Bollinger Bands for the daily chart, okay? So, and then we're actually looking at the Bollinger Band for the daily chart, okay? So right here, we could see that price more or less coincided with supply zone, and we also saw that it was right at the upper Bollinger Band where it came off, okay? Okay, down here, okay, if it comes down here, this demand zone is only at the midline, so this would certainly not be oversold here. Up here, we were kind of getting into an area where price was kind of stretched to the upside. I wouldn't necessarily call it overbought, but it was definitely kind of very stretched to the upside. Right here, it'll be just kind of more or less, right at that midline there, which is the 20-period moving average. All right. So that's what we're looking at in terms of the SPY. And then the last thing is we can also throw in the two major moving averages that people look at. So right there's the 50-period simple moving average, and then you can see right down here this black line. That's the 200-day simple moving average. And so essentially that you can see that's kind of a backstop for this area of demand. Okay, so we have, in a sense, we have kind of a confluence of both a valid demand zone as well as then more or less, an indicator that usually carries a great deal of weight. The 200-period simple moving average is oftentimes regarded as kind of like the major sort of longer term indicator that people like to look at, or at least it's one of them. So at any rate, that's what we're kind of looking at on the SPY. All right. So if we now flip over to the Qs, which of course is the NASDAQ 100, the NASDAQ Composite Index. Okay, so this is what we're looking at now on the NASDAQ, okay? And so again, same thing here. However, in looking at this, we could certainly see that there are these pivots. Here's a pivot right here. And this is where price kind of came in here. And the reason I call this a pivot is that essentially this is kind of almost like a V, right? Or an inverted V. It goes up and there's really no basing. It immediately just drops. And that's because we're looking at this in a daily chart. It just so happens that where we saw something rough, kind of clean on the SPY, we really are not seeing anything clean on the daily here, at least for this level. On the other hand, if we transform this into a 2-hour chart, then we would actually then see some basing there. Okay, so that's why I have that 2H there. Okay, so at any rate, price came up, kind of came down here. This is really that same movement we saw on the SPY, and now we're seeing it on the Qs here. Right here, this is kind of a slop fest here. We could see a bounce out of here, and this to some degree resembles more or less what we was kind of seeing on the SPY. But on the Qs, this is kind of a slop fest in here. And so really, I would be looking, I actually think that the range on the Qs is going to be a little wider than it is on the SPY. Having said that, usually one or the other will end up sort of carrying the day. And so it's quite possible you may end up seeing the SPY, that level on the SPY that's 3% down. And that might actually sort of dictate what goes on. At which point then the Qs will react in here. Okay. On the other hand, if it turns out that tech seems to be leading the way in the short term, you might just see that level on the SPY break, and you may end up coming down to here. And you can see this one is a little less than 6% down. So it's really almost almost twice the distance down as it was on the SPY. Okay. And if I change this to a 2-hour chart here, we can actually kind of see this a little. We can actually see it cleaner here now. So I was looking at that in the daily. So if you notice right here, once we turn this into a daily, you can a 2-hour chart. You can clearly see price comes up. We have these indecisive candles in here, and then this thing rocketing out of there like that. So this kind of really highlights the point where price and supply and demand were in balance here. And then when it rockets out of here, supply and demand go out of balance. Okay, so that's what we see here, about 6% down from current price here, right there. Okay, so that's about 6% down. And again, that's what demand looks like here. And then if we go back to here, so here's the supply zone that we were looking at, and that we've already hit. Okay, and so that's what we've already hit. So this is really not an area that we would look to be trading off of anymore, because this has already happened. So now if we look to see, well, okay, well, here's where price is here, and then we extend this line up to here, we can see that next clean area of supply for the Qs, and that's marked. This is really that daily chart that we were looking at, even though it looks a little sloppy here in the 2-hour. In the daily, that looks much cleaner up there. In fact, if I turn this back into now a daily, okay, right there's the rally, the base, the drop there. Okay, we can see that's approximately 4% up. Okay, so before with the SPY, kind of the key levels were roughly kind of 3% and 4% up and 3% down. On the Qs, it's more like 4%. It's roughly the same thing on the upside to supply. But again, this thing that's further down. And again, this is more or less where the SPY was before, and this is where the Qs are. All right. So that's kind of the status of what these two major indexes look like. Turning to Apple, which is something else that a lot of people look at, and so as a result, we figured we would do the same. So here's a chart of Apple. Here is the daily on this, and to a large degree, a lot of this, as I like to say, the charts don't necessarily they are not necessarily identical, or they don't necessarily look alike, but they rhyme. And by that I mean you kind of have that same flavor for sort of where zones are and how they move. And of course, in the case of Apple, because its market cap is so huge, it's not surprising that, at least at one point, Apple represented almost like 22% of the Qs. That's no longer the case. But having said that, it's still a major chunk of the Qs, and so naturally, you would expect to a large degree that the chart of Apple is certainly going to rhyme with the chart of the Qs, right? So at any rate, here's a 2-hour. This is actually a 2. I'm not going to change it again, but this is a 2-hour supply zone here for Apple. And so, and again, that's approximately 3% or so above current price. And then right here is a 2-hour demand zone below current price. And you can see these are basically 3% and 3% up and 3% down. Okay. Then down here, there's this kind of 2-hour zone, and it sort of also resolves into a daily zone. As you can see, I kind of wrote meh. There's, without going into detail now, structurally, there are a couple of issues that I have with that 2-hour zone. So I'm not necessarily in love with that. Right here, though, this is a reasonable 2-hour zone. Technically, it's not a fresh level anymore. It has been kissed. If we look here, you can see it just kind of came in here and just kind of kissed it. But really, it's almost, to put it in football terms, it's almost as the referees would call it when they have a wide receiver and the quarterback jostling in the end zone, incidental contact. So technically, it's not a fresh zone here. But having said that, it's pretty minor contact. So I would still be comfortable if we got a pullback here, potentially looking for a bounce out of there. All right. So that's the story with Apple. And then lastly, we'll take a look at Tesla. And I have to tell you, Tesla, well, I mean, Tesla, there are zones, but because Tesla has been so volatile lately, thanks to our buddy Elon, well, it's been so volatile lately that there are certainly levels here, but they are very, very far apart. So in terms of near-term trading opportunities, I really don't see anything. I mean, of course, anything can happen. And in fact, if I change this to a 2-hour here, I think there are a couple, like right there is a level there. And actually, that one's actually not that far off, of course. So that one's actually nearby. But in terms of demand, you can see that really the next clean area of demand is a ways away. That's $1.60, okay, versus almost a 190. Okay, so that's approximately 30 bucks down. So that's a long way down. So I don't really see any grand buying opportunities. Right in here, if we drop this down to a 30-minute or 1-hour chart, yeah, there's probably something in there. But I would certainly not be setting anything up now. I would wait to see if we're going to get a pullback. I would wait to see what that looks like, and then we can kind of make a decision of whether there's a trading opportunity. This is okay. The only thing that I really don't like about this, though, it's kind of one and done. In other words, it comes up, and then it's just really that one red candle, and then after that, there's really no follow through. It just kind of waffles around, and then there's a little gap. But at any rate, that's the story with Tesla. As Ryan and I say, not every chart has a setup. And so as a result, one just has to go, you know what, there's just no setup here. And as we always say, the harder we have to work at a setup, usually the less likely is that a setup is going to work, because most of the charts most of the setups that we look at, why did that just happen here? Most of the time when we have to really work hard at a setup, usually it ends up that the reason that we have to work that hard at it is really because there was really not a whole lot there, and we were really just trying really hard to find something. So again, just always keep that in mind. All right. So at any rate, there's your market rundown, and there are a couple of your major symbols. And so we'll call that a wrap on that section here. And then we're going to move on to our buddy Ryan.